Hi, I'm Brad.
I'm Meg, and welcome to the Millennial Report.
Great to be back here. Our first Millennial Report back here in Times Square. We've done a fair bit of traveling, since the new year has begun.
That's true, and it's great to be back. Happy New Year, guys.
Absolutely. So we kicked off 2017 here at NASDAQ with our Fit Week campaign featuring Jamba Juice, Nutrisystem, MindBody, and Lululemon. I was tempted to call it Lululemon.
All
it's
some of my
classier that way, right?
Yeah, those are all some of my top favorites.
Absolutely.
And then we were off to Arizona, where we were at the GRP Advisors Alliance Conference, where we had the opportunity to speak with some advisors about how millennials are viewing and approaching retirement planning and solutions. We also had the guys, Nick and Jack from Market Snacks, here last week, kicking off our coverage of earnings season. And today we are continuing that conversation around a few other big companies reporting earnings this week.
Oh, yeah. And in addition to earnings, we can't go without mentioning the Super Bowl.
Was that this
one of
weekend?
the biggest events, biggest annual sporting game every year, Super Bowl 51.
Yeah, absolutely. And like every year, the commercials were great.
Yeah.
My favorite was definitely from Buffalo Wild Wings. So that's NASDAQ listed and trading as ticker symbol BWLD. Now, first off, you have the man, the myth, the legend, Brett Favre,
Yep.
with all of his conspiracy theories acting like Charlie Day on It's Always Sunny. And they're all surrounding his past interceptions. So the culprit? Buffalo Wild Wings for some reason. Maybe it was saucy fingers. We don't know, but it was stupid and it was funny.
Definitely a good commercial. Anything like Charlie Day-esque, I love it. So definitely a good commercial. While I hated the outcome of the game itself, reminiscent to why I resent the Patriots so much, because they beat my Eagles in Super Bowl 39. So I did love that. 24 on Fox is back. Fox, of course, another NASDAQ-listed company. But okay, that's enough Super Bowl talk. We got to get down to business. Let's talk earnings for a second.
Right. Yeah. So given that we're missed earnings season, we've got to hit on a few companies that reported standout performances in the past quarter. Broadly, we've had 318 companies in the S&P 500 report Q4 earnings. Approximately a third of those have completed, and so far
Two-thirds,
we've seen.
I think.
I'm
we've
sorry,
seen so far.
two-thirds of those,
yeah.
completed.
We're deep.
And we're seeing a 51% revenue beat rate and 75% EPS beat. This is in a market environment where during Q4 of the last year, we all watched the Trump rally, major indices notching new record highs, the Dow, of course, finally hitting 20K during the third week of the year. And we're not even done yet, and there will be many more companies reporting in the coming weeks.
Spot on. So in the environment we're in right now, that you just described it perfectly, but what we have seen this earnings season from some of the other publicly traded brands that we millennials retain the largest affinity for, what's going on there? Whether we're ashamed of it or not, we're also known as this generation that originated Netflix and chill. So one of my thoughts coming into this episode was, how strongly does the phrase parallel with performance? I'm warning you, it's going to be a lot here. So viewers, brace yourselves and stay with me. I promise I'm going somewhere. So naturally, two of my picks for this episode were Match Group and Netflix, both NASDAQ traded, NASDAQ listed here. So first, Match Group, trading as ticker symbol MTCH. Has critical connections with millennials at every age. We often talk about the stages of millennials, and since we talked commercials earlier, I'm sure that you've seen their flagship Match.com commercial, that ad spot that's running, that kind of points back to where folks are meeting a lot of the people that they date. And so it's kind of making people do this discount double check on why they keep going to the bars with little success, urge to try this Match app, which they finally do. And I would think the higher age bracket of millennials are more apt to actually test out this app. But the younger bracket of millennials, for us, it's Tinder. So in his own hilarious way, I think it was Aziz Ansari that once said in one of his stand-up bits that Tinder and Netflix should actually join forces so that I could see when I log into my Netflix account, based on my Tinder settings, that Brenda and 17 other singles who meet my profile settings are watching, this title too, Gone with the Wind, if you will.
So we could binge together.
Yeah, we could binge together. A couple that binges together stays together.
That's definitely true. That's a proven theory.
So though this contextual environment where it was said was a stand-up comedy show, I think there's still some truth to how those brands could coexist in the future with users still being perfectly happy. Your Spotify and your Instagram can already be connected to the same app, showing potential matches where you've been and what you're listening to. So next in this list of senses is, what are you watching? So that can easily make or break a relationship. It's easily a major compatibility area. So with regard to earnings for Match Group, one of their highlights from their releases as it relates strongly to millennials was that Tinder more than doubled ending number of paid members in 2016, growing from 0.8 million paid members at the end of 2015 to over 1.7 million PMC at the end of 2016. So since this time last year, the stock price for the parent Match Group has gone up over 39% from the $9 lows of last February.
The growth in that user rate is incredible.
Absolutely.
Oh my God.
And it goes to show just how much people are still gravitating towards it. And an important note, actually, as well, is that that's for paid members,
Yeah.
too. So those are it's just accounting for the members that they're actually seeing some revenue off of directly to the platform. But also think about how advertisers are using the platform too now, because if I go through the app and I'm swiping and I'm swiping and I'm swiping, eventually you get to something that's from an advertiser, whether that's GoPro or like HotelsTonight.com.
How often do you see one of those?
I mean, I'm not on the app like every day, but
But I mean, when you're swiping through, so you'll come up with an ad, right?
Yeah.
Do they have special deals?
I would say yes. So yes, they do. It's like a book now and save 10% type of thing. So there's some incentive to going into the app. You should shop on there sometime.
I know.
I've been out of the game.
I've been out of the game for a little while, but maybe I could just have the app on this, like as a. I'm not going to do that, I promise.
Just a whole bunch of swipe left so you can get to the discounts?
Yeah, just at least, it's like cutting coupons.
Yeah. Somebody would see that this data is skewed when they go back into the analytics report. But since we mentioned Netflix and chill earlier, I've got to mention Netflix's reported success from Q4 as well, which we hit on briefly during a previous market update with our NASDAQ Market Intelligence Desk, which you should absolutely tune into every day. Netflix beat revenue forecast from the previous quarter, finished the year with 93.8 million members on 19 million net additions versus 17.4 million in 2015. They also made the mention of a 10-year anniversary of their launch of streaming. So that statement alone from them makes me feel old. I don't know about you. Not cool, Netflix. But what is kind of cool is that in all of this news, it sent some analysts proclaiming that this would be a $270 stock by 2020, which would be nearly double from where we are today, even though I know all of our millennial and millennial at heart viewers tuned into the earnings call. I know you did. This is probably just repetitive for you. But one comment that CEO Reed Hastings gave during the investor call that I think could have contributed to investor community confidence was reaction to a question that came through describing overperformance, in fact. And Reed's response was, you describe it as overperformance in the quarter, but if you look at it on a longer term basis, like over the last couple of years, it smooths out. So we are seeing some lumpiness in the quarters depending upon when we launch certain content, but the big picture is remarkably steady. And then my final point in this millennial analysis monologue that I've gone on is original content. This is a brand that has a major focus on original productions to eliminate some of the licensing fees that once bogged down their earnings statements too. So now you see that model trickling into other services and competitors. Amazon, for example, where we just saw Jeff Bezos at the Golden Globes the other week when that came on, supporting some of their originals too. This award season, we've seen both Netflix series and Amazon series take home awards from both the Golden Globes and the SAG Awards, where it was awesome watching the Stranger Things cast accept their award.
That too, and The Crown is so good.
The Crown is very
good. Oh my gosh, The Crown is amazing.
Definitely. So there's a lot of original content, a lot of focus on it, and one other thing, both brands have quickly become their own production studios at a fairly rapid clip, mitigating those licensing fees that we talked about. So in terms of Netflix original, global adoption is going to be a major area of focus over the next year and future for them really too. Local languages, and specifically of note, the Netflix Chief Content Officer on this same call, and then I'm bringing my plane in for a landing, Chief Content Officer Ted Sarandos, I believe it is.
Yeah.
Forgive me if I'm wrong. He said that we had a pretty powerful release in Q4, so you see particularly shows like Luke Cage, which I love, Narcos, which everybody loves. New seasons of Narcos travel really well. Narcos, can't pronounce. Travel really well around the world. So they know that they are exciting here, and as consumers have television in America, they've really adapted to them. but it has been fantastic to see how these shows are adopted around the world as well, he says. So one show of note that will be released in May that could drive additional net new subscriptions in Q1 as they released the promo thematically timed on Inauguration Day was none other than Frank Underwood.
Oh, House of Cards. I love
House
Claire.
of Cards. So it's coming back, and that was one of their original acquisitions too.
Yeah.
Dating back to 2011. So naturally, I'll also be interested to see how, because we're broadcasting here on Facebook Live too, they're throwing their hat into the original content ring as well. So it'll be interesting to see some development in that area too for Facebook, given that they recently announced that they're exploring the market too. So.
Yeah, no, House of Cards is the whole reason I understand the dangers of binge watching.
Yes.
I went nuts on that. And
Everybody does.
I was in college and I should have been doing other things. I'm going to take you a little bit towards the Super Bowl party again
Okay.
that I was at. So we were at the Super Bowl.
Did you guys eat? You had some food
we had
there, right?
so much food.
Okay.
I made crab dip. We had wings, of course. Oh my gosh, we had buffalo chicken bread. We had cookies and cupcakes. My friend Rachel made these amazing cupcakes.
God.
I know,
I
we
need
did
an
really
invite
well.
next time.
We did really well. But so at the Super Bowl party I was at, we were talking about companies that were getting salty on Twitter. And one of the gyms from the last couple of months came from Wendy's, ticker WEN. Now, if you're not familiar, the concept is this. The Wendy's brand is responding to user comments, especially ones insulting Wendy's or praising its competitors, with cheeky comebacks ranging from playful to total brutal roasting. Okay, so Forbes, I was checking it out, describes it as a bold move from an otherwise docile brand, which totally is true. And it's attracting a lot of attention and going viral on the types of media outlets frequented by yours truly, millennials. Now, some highlights of tweets include Wendy's responding to a picture of a garbage can when one user requested for the chain to help find the nearest McDonald's. Perhaps the most viral exchange had Wendy's sarcastically reminding a user that refrigeration exists and that it is necessary to keep meats from becoming contaminated. And, when they made the accusation that the chain uses frozen meat. Now, this exchange may have also inspired their Super Bowl commercial this year, and thus that Super Bowl party conversation that got us here today. Now, it's a risky thing to do, and there are a lot of opinions about how smart it is for a brand to engage the haters and the Twitter trolls, but so far, so mostly good. And while we're on the topic, the Wendy's 4 for $4 deal is my favorite thing. From the moment I found out that you could substitute a Frosty for your beverage, I was so on board, so sold. My go-to, by the way, is the Junior Bacon Cheeseburger, the spicy chicken nugs, the small fries, and of course, a chocolate Frosty, which I use as a dipping sauce for the fries, and occasionally the spicy chicken nuggets. Now, Wendy's will be reporting, I have a lot of passion.
All of them, yeah.
Wendy's will be reporting earnings on Valentine's Day, February 14th, but I'm going to be grabbing another 4 for $4 deal long before then.
100%. So funny story, I used to get in trouble in high school for stopping at multiple places on the way to school. One of the stops was local Wawa, of course, and then Dunkin' Donuts. I would stop at 2 stops. And then on the way home from school, I would stop at Wendy's and get a Baconator.
Yeah, no, the Baconator is
excellent. It's about that life.
Wendy's has always been my number one favorite. Like, I will go on road trips, and I'm not even looking forward to where I'm ending up at. I just know that along the way, I'm going to get to go to Wendy's.
Great fries. Some of the best fries in the biz.
Totally agree. Totally agree.
Yeah. So that was a lot. I hope you didn't scare our viewers off.
I'm sorry. I really care about Wendy's.
It doesn't matter if we scared the viewers off. We really care about Wendy's today. No, but that was, we've had a lot of great companies that have already reported. I mean, as you said earlier, 2/3 of the companies that are going to be reporting have already, put their earnings out there. So it'll be interesting to see what the rest of this earnings season holds for sure.
Agreed.
Justin, do we have any questions that came through from the audience? Nothing. Well, if you
answered all of them with your Netflix talk.
I know, right? I probably put somebody to sleep too. But that's cool. They can Netflix and chill. They can have some Netflix on in the background.
There you go. No, and that was definitely hefty between your incredible research and my incredible passion.
Yeah.
And again, as a reminder to our viewers, none of the securities mentioned in this episode should be taken as an investment recommendation.
Critical.
Please do not. Please do.
Do it.
No, do your own due diligence and consult your financial advisor before investing.